Hello and welcome to this week's edition of FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, September 21st, 2012. Well, this week a little bit of a corrective phase for the euro, much needed after its run up for a couple of weeks, and quite a steep run up at that. So certainly not unexpected and certainly healthy for it. So we pulled back this week. Maybe we'll pull back next week a little bit. There is some support down here right where we are right now, but additionally if we fell further next week we could get down to about 128.18, 128.20 area. And then we could certainly turn around and make a stab for the new highs and probably even exceed those highs, getting up to about 135. If we look on the weeklies, we can see how we have this very nice U-shaped bottom here. So it's really turned around. We've broken above resistance lines. So the next real stopping point for us, and the next point that we'll run into a lot of resistance, is up here around this 135 area. That may be it then for this rally. Now if we look out at the monthlies, we can see how this month we rallied up to that upper channel line and then have since backed off. So what could happen is we got one week left of trading in the month, so we could end up near that high next Friday, and then maybe open October up into above that that minor trend line. We could rally. We could certainly rally way up in there, and we could rally all the way up to the 145 area if we really decisively moved higher above that. We could get a sustained rally for a while. However, longer term, this is still in a downtrend. So we are still very vulnerable to a pullback here, and fundamentally as well, there's still a lot of bearishness there within the Eurozone. So there's a lot going on. It's not an easy trade by any means, but playing the short-term rally may not be a bad deal. British pound also pulling back for the week, not nearly as much as the euro. We're up about 30 pips today. And it is actually ran up and made some new highs today and then sold off. So really kind of unexpected its move today. Really should have sold off a little more. It would be healthier if it did sell off a little more. We could come all the way back down here to just under 161. This would be a healthy type of correction for it. Bring the stochastics down, also down below 50. So it would be a good corrective phase if we could get down there and do it hopefully next week, because then in October we could run up a little more. If we will look on the weeklies here, we can see how this week is still remaining positive, albeit a very little bit of positiveness, but still positive. And really looks like the market is going to rally up here to about the 165, 165.50 level. We get up into there, and that would probably be the extent of it. As we can see from past history here, we're coming smaller and smaller to a peak, and eventually we will sell off, because we look here at this monthly and we can see how we have this this consolidated phase here after this huge sell-off. So the downtrend is still very much intact here, and will still continue on, but we're having just a minor corrective phase here. So eventually we will fall out of that triangular pattern. Now the US dollar against the Swiss franc, down a little bit today, down only about 4 pips, but for the week we are up a little bit, and you can see how we're backing up here. Very, very steep incline, and we do have kind of a curvature going here, so we are vulnerable to a kind of a spike low coming in, and the US dollar Swiss franc is noted for that kind of behavior. So we could rally up here a little bit, spike way down, maybe even to down below 90, and then come right back. So if we look on the weeklies, we can see how that's playing out here. We're going to end up setting a new kind of upward movement here, and if we can move this down to about here, we can see how that will play itself out. Now of course if it sells off even more, we can move it down there, so the angle of ascent can certainly change. This being said, the spike low back here is the kicker there. That is by far the low. Very, very, very unlikely that we would exceed that low. So here we are. We had a slight up move off of that. We're establishing the angle at which we're going to continue to move up. Now we look here on the monthlies, and we can see how this angle here, as compared to these angles back here where we had corrective phases, are not nearly as steep. And it will certainly, once we get above this level up in here, wherever we meet that upper channel line, once we decisively close above that, then we will certainly take off and move higher quicker. That may be still several months away. So, U.S. dollar against the Japanese yen sold off this week. Today we're down about 9 pips. We're just above 78. We had a nice rally last week, and beginning of this week a little bit of rally and then sold off. So all in all, we're still in that same range here. This is obviously the supportive area. Last week's spike low here will end up being just that, and will probably be the lows that we'll see for quite a while. If we look at the weeklies here, we can see last week's spike there, and then this week's consolidation even further. So the weekly ranges are getting smaller, indication that the market is going to do something just like it did back here. That will be an upward move here. And on the monthlies, we can see how we're almost unchanged for the month. Very unlikely that we will do very much for the month, considering there's only 1 week left. So we could close in this very area here. At some point here, either next month or the month after, we will start to move higher. And when we do, the next phase will take us up and above these highs back here around at 84. So it will push higher then. Euro Swiss having a poor week this week, giving back quite a bit of gains, although this is obviously more of a substantial rally that we're seeing here now. This has lasted several weeks, first time in a year that this has happened. So we're seeing a sustained rally of some sorts. Whether it be good or bad is questionable at this point, but we are seeing a rally. So at this point now we seem to be bottoming here, and we're going to move higher. We're up 11 points on the day, so now the next move will be to take out these highs up here around 120, 180 area, and we should probably do that in the next week or so. On a weekly basis, we are lower for the week, although we have moved up now quite a bit off of that those lows that we were in for just about a year, and around that 120.10 area that we were stuck at for the longest period of time. So looks positive longer term. Euro yen giving up a little bit today. Oops, yeah, get on the dailies here. Giving up just a little bit. Right now it's actually up 3 pips, depending on your quote service, either up or down. We did have a corrective phase here. We came right back down to this minor, what was a resistance line, now becoming a support line. So we'll see if we do bounce off of that into Monday's session. So if we do, we bounce higher, and we'll go up and take out these highs around the 103, 104 area. And if we look on the weeklies, we can see that technically we should really rally up to about 106 here in the next week or two. So we do that. At that point, then we do open up the doors for another sell-off, and we look at here on the monthlies. We can see, depending on how we end the month, we could end up near the highs on the month, and then for October we could certainly rally up to about 107, 108 area and still be within the downward trend here. So overall, just very much like we talked about with the British pound, the dollar against the pound. A lot of damage was done back here, and instead of working its way upward in an upward moving triangle like the pound, this one is moving itself down in a downward moving triangle, which should fall out in a quick phase down and establish new lows down in the 80s, and then rally back up, and then we can go up and start to work our way up. But there's going to be a lot of consolidation. This was a lot of damage done to this market, so it's going to take a while for it to work its way out. That is it for the week. Certainly stop by FX Addicts if you haven't already. Feel free to contact me if you have questions or would like some help in the realm of currency trading, or interest rates for that matter as well. So please stop by, say hello. Thank you.